discussion forward in terms of where does the crude oil prices are headed, as well as what are the factors that could be weighing heavy when it connects to the Indian markets. And for that, we are being joined by Yogesh Patil, Director Research of Oil and Gas at Daulat Capital. Hi Yogesh, good afternoon. First up, this new sanctions by US on Russian oil. How major an impact that could be on the global crude oil prices? Help us understand that. Where do you see the oil prices headed globally?
So, Friday evening, as you have seen, the Biden administration imposed the sanctions on the Russian export oil supply chain, and two major oil companies like the Crude and the Gazprom Gas, which are involved into the closer to 1 million barrels per day kind of oil exports on a daily basis. That's one thing. Secondly, they have also sanctions on the closer to 180 vessels which are exporting the oil to different nations, and lastly on some insurance companies also. So the sanctions whole on the supply chain, oil export supply chains from the Russian side. How it is going to impact on the Indian, mostly on the Indian refiners. So there are two types of contracts are there. Few companies have already entered into the long-term contracts. We don't expect any kind of impact on the long-term crude sourcing contracts from the Russia. That's one thing. But secondly, looking into the spot purchases from the Russian oil will definitely be impacted. India's Russian oil import is closer to 40-45% coming from that side. So that will be impacted. First thing, one need to note down that a kind of discounts which are getting on the Russian crude purchases were closer to $3 per barrel as per the ministry data on the October-November side. Now, Indian refiners and the oil marketing companies need to start looking for the fresh oil, which will be mostly from Middle East side, and which will not be available at a discount, and that will be a factor which will impact on the gross refining margins of these oil marketing companies. That's one thing. And secondly, already the petrol, diesel, and the LPG prices, which are indirectly freeze at some levels, so these OMCs will not be able to pass on the higher cost of crude prices to the Indian consumer. That's one thing. So that kind of hit we are facing on the higher crude prices. Apart from that, ONGC and the Oil India, what we expect, they should report the better or the healthy set of number considering the INR is also depreciating. Secondly, the oil prices are also rising up, and the India or the government has already removed the windfall gain tax on that side. So this is all in all positive for the ONGC and Oil India. But the today ONGC is reacting a negative mainly because what we believe, there are some assets or the fields where the ONGC has invested into the Russian region. Three fields are there, and the three fields are contributing closer to 10 to 11% to the overall ONGC's production. That's one thing. Out of these three fields, one of the field like a Sakhalin, which is a oil export oriented field. So because of these sanctions on the Russian oil exports, these fields could get a little bit hurt, or kind of a negativity can be built up. And because of that, we expect ONGC could be reacting a negative today. That might be the one reason.
Right. Hi, good afternoon, Yogesh. This is Ankita also joining in. Yogesh, in the last 1 week, the prices of Brent crude and WTI, they have moved up. They've ticked up 6 odd %. And now if the prices are to remain elevated, does that bring the inflationary concerns back? Is inflation back on the table? And if yes, then what is going to be, the stance for RBI as far as rate cuts are concerned?
Basically, our strategy team will take a call on this side. But considering higher oil prices, definitely the raw material prices and the transportation cost for these companies, all the companies will definitely increase. That's one thing. So that's my view on the RBI policy, whether they will take a call on rate cuts or not. So our strategy team will get back to on this side.
All right, but Yogesh, you were just mentioning and helping us understand that why ONGC is actually reacting negatively. So, if you can tell us that, is there any company that has exposure to Russia maybe and that can be impacted negatively? We do understand that OMC's the margin could be under pressure. So, apart from ONGC, any other player within which can be impacting negatively? That's the first question. And also, Yogesh, I wanted to understand that is there any sensitivity analysis that you have done that for every rise in the crude oil prices, how much of the EBITDA could be impacted of these OMCs in terms of the refining margins, how much of a hit there could be?
Coming back to your point on the Russian assets, ONGC and the Oil India is having oil producing and the gas producing assets in Russia. Looking into these assets, one need to look into the whether these assets are oil exporting assets or these assets are producing oil which will be consumed inside the Russia. So that bifurcation gives us an idea because the sanctions are on the Russian oil exports. There is no sanctions on the domestic oil productions as of now. So that is the one thing. And what we believe kind of negativity will be only built up if these assets are completely export oriented asset. That's our point. Secondly, coming back to the oil marketing companies, yes, definitely every dollar per barrel increase in oil prices, the impact on the your gross marketing margins would be closer to kind of 55 paisa per liter. That's one thing. And in addition to that, crude depreciation, sorry, the INR depreciation versus the USD is also impacting on the gross marketing margins of these companies. So this is overall a negative scenario getting built up for the oil marketing companies in a short run. Yeah, that's it.
All right, Yogesh, thank you so much for taking the time out and joining us and weighing in on the impact of elevated crude prices on Indian oil marketing companies and so on. But thank you so much for joining us.